Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the confusing world of finance, and where today we're diving headfirst into a shipping company's financial report. Buckle up because things might get a little choppy. Today we are dissecting the annual report from Amplify Commodity Trust, a company that manages shipping ETFs. Now if you're new here and you love getting the inside scoop on what these massive corporate filings actually mean, for companies and investors, hit that subscribe button. And if you want to connect with other finance enthusiasts and get even more exclusive insights, join our Discord server, linked down below. So what exactly is this filing and why should you care? Think of this Form 10K as a company S yearly check. Up a deep dive into its financial health, its risks, and its overall performance. Amplify Commodity Trust manages two main funds, Breakwave Dry Bulk Shipping ETF ticker BDRY and Breakwave Tanker Shipping ETF ticker. These funds essentially let you invest in the daily price changes of freight futures contracts for dry bulk shipping and oil tankers. Essentially, the company is betting on the ups and downs of the shipping world, and this report tells us how that bet is playing out. Let's get straight to the numbers. These funds are governed by some pretty complex regulations like the Commodity Exchange Act, and they are overseen by the Commodity Futures Trading Commission and the National Futures Association. This means they have to be super careful about how they operate and report their activities. Now for the juicy part, the financials, looking at the combined statements of assets and liabilities as of the 30th of June 2025 and 2024, we see some big shifts. For Breakwave Dry Bulk Shipping ETF, its net assets went from around $39 million in 2024 to over $65 million in 2025. That is a significant jump. On the other hand, the Breakwave Tanker Shipping ETF saw its net assets decrease from about $2 million in 2024 to just over $1.3 million in 2025. This big swing in the dry bulk ETF is certainly noteworthy. Let S break down what comprises these assets for BDRY. On the 30th of June 2025, their investments in securities were valued at a staggering $44.7 million. This is a huge increase from just $8.3 million in 2024. It looks like they significantly ramped up their investment in securities. However, for BWET, this number dropped from over $1 million in 2024 to just over $544,000 in 2025. This suggests a scaling back of investments for the tanker fund. Now, let S look at liabilities. For BDR, total liabilities went from around $1.1 million in 2024 to about $1.2 million in 2025. This is a relatively small increase given the growth in net assets. For BWDs have gone down from over $213,000 in 2024 to just over $193,000 in 2025. This is a positive sign showing they are reducing their debts. Moving on to the statements of operations, which tell us about the company S profitability. For the year ended the 30th of June 2025, the Breakwave Dry Bulk Shipping ETF reported a net loss of over $16 million. This is a sharp contrast to their net income of over $46 million in 2024. That is a huge swing from profit to loss. The tanker fund BWET also reported a net loss of over $1 million in 2025, down from a net loss of about $318,000 in 2024. Both funds are showing a downward trend in profitability. The big reason for BDR's massive loss comes from net realized and unrealized losses on investment activity, totaling over $15 million. This means their investments in futures contracts have taken a beating. On the flip side, in 2024, they had a substantial net realized and unrealized gain of over $47 million. Talk about a roller coaster. For BWET, the story is similar with 2025 showing a net loss of nearly $1 million from investment activity compared to a net gain of over $113,000 in 2024. Even looking at their net investment loss, not directly from trading but from operational expenses, we see differences. BDR's net investment loss was about $472,000 in 2025, a worsening from around $601,000 in 2024. For BWT, the net investment loss was $29,000 in 2025, a significant improvement from over $205,000 in 2024. So while trading losses are a major issue for BDRI, operational expenses are also a concern. Let's talk expenses. For BDRI, total expenses in 2025 were around $1.8 million. In 2024, it was over $2.4 million, so expenses have been reduced. For BW, expenses were around $485,000 in 2025, down from about $577,000 in 2024. The sponsors have agreed to cap expenses for both funds, which is a good sign for investors. One interesting point is the waiver of CTA fees. Breakwave Advisors LLC has waived a significant portion of its fees. For BDI, they waived over $217,000 in 2025, and for B25 and for BDI about $27,000. This is essentially the advisor giving back some of their potential earnings to keep the fund S expenses down. Now, looking at the volume of their derivative trades for our dry bulk ETF BDI, the average monthly quantity of futures contracts was about 1233, with a notional value of over $16 million. For the smaller tanker ETF BW, the average monthly quantity was much lower at 52 contracts, representing over $710,000. This highlights the much larger scale of operations for the dry bulk fund. When we look at the fair value of derivative instruments as of the 30th of June 2025 for BDRE, we see a total of about $861,000 in unrealized appreciation. This means their futures contracts have lost value. For BDWET, this unrealized appreciation is about $60,000. This confirms the losses we saw in the statements of operations. Every investment has risks, and these funds are no exception. The report details several of them. There is investment-related risk where the value of your investment is tied directly to volatile freight futures. There is negative roll risk, which basically means that as they re-up their futures contracts, they might have to pay more for them than they get when they sell the old ones, impacting returns. Natural disasters and epidemics are also listed as risks. The report specifically mentions the conflicts in Ukraine and the Middle East and the impact of tariffs affecting global trade. These are significant external factors that can wildly impact shipping rates and by extension these funds. Let's look at the total return for the year ended the 30th of June 2025. For BDI, the total return was a negative 53.62%. Yes, you heard that right, a massive loss. This is compared to a positive 19.61% return in 2024. For BDI, the return was a negative 36.30% in 2025, a drop from a negative 19.89% in 24. So both funds have had a tough year, with BDI taking a much bigger hit. And how does this translate to the share price for BDI? The net asset value per S-Hair at the end of 2025 was $5.63. This is down from $12.13 in 2024. For BDollars in 2024, it is $10.63 in 2025, down from $16.69 in 2024. The market value per S-Hair closely follows the net asset value, so investors have seen a significant decline in their investment value this year. Now, a quick word on the auditors. Cohen and Company Limited issued an unqualified opinion on the financial statements for the year ended the 30th of June 2025. It is worth noting that previous financial statements were audited by Withum Smith Brown PC. The change in auditor is something to keep an eye on, but doesn't necessarily signal a problem on its own. Looking at who owns these shares, we see large institutional holders like Canaccord Genuity Wealth Management and Interactive Brokers LLC holding significant stakes in BDI and BET respectively. For BDI, Canaccord Genuity owns over 3 million shares, representing about 25.8% of the class. For BWET, Interactive Brokers LLC owns over 33,000 shares, making up 26.7% of that fund. This shows that these ETFs are not just for small retail investors, but are also used by larger financial institutions. So what is the verdict on Amplify Commodity Trust S performance? Clearly, the dry bulk shipping ETF BDI has had a very rough year, with significant losses in its freight futures investments. The tanker ETF BDI also saw losses, but not as dramatic. The company itself is navigating a complex regulatory environment and is exposed to significant external risks like geopolitical events and economic downturns, which directly impact shipping rates. The increase in BDI's total assets and investments in securities indicates a doubling down. However, the significant losses in BDRE's investment activity and the overall negative returns in both funds for 2025 are concerning for investors. While expense caps and fee waivers are in place, the core business of speculating on freight futures is inherently volatile, and this year has shown just how much it can hurt. Alright, that is our deep dive into Amplify Commodity Trust S annual report. What are your thoughts on these shipping ETFs? Are you looking at investing in them? Let me know your thoughts in the comments below. If you found this analysis helpful, give it a thumbs up and subscribe for more content like this. And remember to join our Discord community for more discussions and insights. Thanks for watching, and I'll see you in the next video.